I say this is an early technology still. It's 15 years old. It's been very hard for people to understand, and it's had the headwind of a lack of regulation or regulatory guidance to allow for its full acceptability. And so that headwind has prevented Bitcoin from really going in the direction that it could go in. Having said all of that, it's probably been one of the best performing assets in the last. I mean, I think you could make this statement. I'd have to Google it or Chat GPT it, but I think you could say it's probably the best performing asset.
Despite the volatility, Scaramucci places Bitcoin firmly within its historical 4-year cycle framework. This cycle is driven by Bitcoin's halving mechanism, a core feature of its design introduced by Satoshi Nakamoto. Every 4 years, the reward for mining Bitcoin is cut in half, reducing the rate of new supply entering the market. Roughly 2 years ago, the daily issuance dropped from about 900 coins to 450 coins. This tightening of supply has historically led to 1. An initial price surge, 2. A mid-cycle correction, typically 30 to 50%, 3. A renewed uptrend toward the latter part of the cycle. According to Scaramucci, the current downturn fits perfectly within this pattern. He suggests that Bitcoin is now in the middle phase of the cycle, with a potential recovery and renewed momentum expected toward the fourth quarter, around October.
I want to go to what started the rise to 126, if that's okay, because it sort of peaked at 126, down 43 now, but it actually got down almost 50%. It was at its low for at least this cycle. It was down about 49%. There's this regulatory component. So now the expectation are that 2 different pieces of legislation are going to pass. One is the Genius Act and around stable coins, and one is the Clarity Act, which is around market structure. And so the thought was in 2025, we'd get both of those pieces of legislation passed. And so Bitcoin zoomed up to 126,000. But, you know, as everything happens in our businesses, this is my 38th year of investing, and I've been through 10 bear markets. People at the top get over leveraged. They get very ebullient. They get very talky, optimistically at the top. Chatty at the top. Yeah. And so what ended up happening was the legislation seemed less likely to happen. And then you may remember on October 10th, the president was talking about rare earth minerals in China. It could have been anything for that matter, but it sort of pulled the pin on the situation. And then we had a cascading effect where the you know, Bitcoin specifically, other coins did as well, but Bitcoin specifically traded down. So it's important to lay out that backdrop. And so if you're sitting there as a Bitcoiner, I think another thing that happened, the ETFs came into place. BlackRock now has probably one of the largest ETFs in the world, their Bitcoin ETF, known as IBIT. You saw a lot of buying into that ETF. It was from high net worth individuals, some institutions, some pension funds, et cetera. And then concomitant to that, you saw whale selling. And so you literally had people that were holding Bitcoin from $10, $12, $100. They made a decision that north of 100,000, that seemed like a good time to sell. And maybe they had that in their heads from years ago. If it gets to 100, I'm going to take some money off the table. But all that notwithstanding, I think we're in the typical 4-year cycle for Bitcoin. And so what typically happens is, just to give people a quick refresher, Bitcoin launches in 2009. If you read the Nakamoto white paper, you're basically going to have supply put into the marketplace. It's going to be fairly consistent supply. And then every 4 or so years, as it gets to a certain hashing moment, you'll have a halving of the supply. And so the supply halving happens every 4 years or so. About 2 years ago, we went into a halving, Bitcoin halving, where we went from 900 coins per day to about 450 coins. And so what that does is it shrinks up the supply, and it changes the dynamics for the miners, the people that are mining Bitcoin. And so what you've had over the last 3-4 cycles, these 4-year cycles, you've had a period of rising in the beginning of the cycle, and then you have anywhere from a 30 to 50% correction as you get to the middle of the cycle, which is more or less where we are. And then if I'm right about this, the cycle will start to regain traction towards the beginning of the fourth quarter of this year. So you'll start to see probably movement and activity, appreciation by October of this year. And so that's very consistent with how a traditional Bitcoiner would think about it.
A key insight from the discussion is the generational divide in how Bitcoin is perceived. Older investors, particularly those over 60, still favor gold as a store of value. This was evident during recent periods of currency debasement fears, where gold prices rose while Bitcoin declined. However, younger generations, those currently in their 30s and rising into positions of financial influence, are more likely to view Bitcoin as the superior alternative. Over the next decade, as this demographic gains control of capital allocation decisions, Scaramucci believes Bitcoin adoption will accelerate. He predicts that Bitcoin could eventually reach parity with gold's market capitalization, which he estimates at around $30 trillion. If that happens, Bitcoin, currently far smaller, could see significant long-term appreciation.
I haven't sold any, and I've been buying it regularly. And I think what you have to do with Bitcoin, and I say this to people, you have to study Bitcoin and you have to do the research on Bitcoin. And people that do, say, the requisite 100 hours of research, I would say if 100 people do 100 hours worth of research, 90 to 95 of those people will end up buying Bitcoin. I'm not saying everybody, but I believe that people who really understand it look at it and say, okay, that is a hardened asset. It has the technical properties that we've always looked for in money. You have to think about it for what it actually really is. And this is this hardened, global, fully transparent, fully distributed, decentralized spreadsheet. And so the tokens or the pieces of property, the digital property on the spreadsheet, they're immutable. They can't really be changed. There's 21 million of them. There'll never be any more of them. Some think maybe 1 or 2 million of them were destroyed just from the lack of storing them properly in the beginning of Bitcoin. So you have a very small supply, and I think you're going to have lots of global demand over time. Will it be the universal exchange? Will it reach what Michael Saylor talks about, the Bitcoin standard, where it will be our global monetary system? I'm not in that camp.
Okay.
God bless him for being in that camp.
Sure.
I see it more as a digital store of value. I see it more as digital gold. And people my age don't believe that, because when you had the currency debasement fears going on in 2025, gold shot up. You had a K going on, gold was going up and Bitcoin was going down, which tells you that the people above the age of 60 that have the money, Liz, they are still thinking about gold in the old-fashioned traditional way that we think about gold. But I would submit to you that people that are my children's ages in the low 30s will 10 years from now be in their low 40s. And as they get into senior positions in asset management firms, they'll see Bitcoin differently than their moms or dads did. And they'll see Bitcoin as a digital store of value, easier to move around than gold, a lot more transferability, but sort of the same properties and sort of the scarcity of it. And I think it reaches the market capitalization of gold. Now, gold has had quite a run, but it's also had quite a setback recently. I say this is an early technology still. It's 15 years old. It's been very hard for people to understand, and it's had the headwind of a lack of regulation or regulatory guidance to allow for its full acceptability. And so that headwind has prevented Bitcoin from really going in the direction that it could go in. Having said all of that, it's probably been one of the best performing assets in the last, I think you could make this statement. I'd have to Google it or ChatGPT it, but I think you could say it's probably the best performing asset in the last 15 years. It's loosely correlated to the NASDAQ. It used to be directly correlated to the NASDAQ. It's more loosely correlated to the NASDAQ. As we continue to scale, okay, I think it will fit the parameters that you see in gold. And I just remind people that gold seemed like a very stable asset until recently. Now, gold itself has had a lot of volatility. If you look at gold trading patterns in the last 12 months, there's been way more volatility in gold than in years prior. And so we have to accept that there's going to be volatility, but I do think over time, this will become an adopted asset class. And I would just recommend to people to learn about Bitcoin. I am always cautious with people. You don't have to make a big investment. But if somebody like me is right and you have a 1 or 2% position in Bitcoin, let's say I'm wrong. And I've been humbled by life. I've been humbled by markets, and I certainly could be wrong. If it trades to zero, you haven't impaired your capital base substantially if you only have a 1 to 2% position. But if I'm right, and it's a $1.5 trillion asset, and I don't know where gold is right at this moment. I'm assuming it's about 30 trillion for sake of this argument.
I did the math this morning,
All right,
about 30.9, I think.
Okay, so if you have a 1.5, $1.4 trillion asset that could potentially reach parity with gold over a 10-year period of time, and you put 1 or 2% exposure in it, and people like me are right, or Michael Saylor or Michael Novogratz is right, I think you'll be well served. I'm saying the overall market cap, 21 million coins into the marketplace, I think could trade close to $30 trillion. That would be roughly...
Over how long? I
would say it would probably take 10 to 15 years.
Okay.
But the question is that a good investment for you to go 20x on something in 10 to 15 years? For somebody like me, it is. And so I own a lot of Bitcoin, and I've recommended it to people. And I made a decision, and it cost me, by the way, I made a decision to pivot a part of our portfolio into Bitcoin way back in October of 2020. So I think we've been generally right directionally, and I think we'll continue to be right, but we got to get the regulation right. Don't buy it indiscriminately without having some awareness of what I'm describing to you, this sort of decentralized, hardened spreadsheet, which has the technical properties associated with things that we attribute to store of value. You have to get conviction on that first.
Okay.
If you get the conviction on that, buy a small amount of it. You don't have to buy a super amount of it. I could be wrong, and I want people to know that. The third thing I would say is you have to have at least a 4 to 5 year period of time with Bitcoin. Don't trade Bitcoin. I don't know anybody that has bought any high in Bitcoin that has not made money. So said differently, if you bought the high from 5 years ago, you're probably in the money right now. If you bought the high in October at 126, you're not in the money, but I would imagine between 2025 on your way to 2030, you'll be back in the money. Every rolling 5 years, people have done very well in Bitcoin, and so you have to have a minimum of a 5-year horizon.
Anthony Scaramucci's analysis cuts through the noise surrounding Bitcoin's recent price swings, offering a grounded perspective rooted in experience, data, and historical patterns. Rather than viewing the drop from $126,000 as a failure, he interprets it as a natural and necessary phase within a broader cycle, one that has repeated multiple times in Bitcoin's history. His message is clear. Bitcoin is not a get-rich-quick scheme, nor is it a guaranteed success. It is an emerging asset with unique properties, significant potential, and undeniable risks. For those willing to study it, approach it with discipline, and maintain a long-term perspective, it represents a compelling opportunity in the evolving landscape of global finance. As the market matures, regulation develops, and generational attitudes shift, Bitcoin's role in portfolios may continue to expand. Whether it ultimately reaches the scale of gold or remains a niche asset, one thing is certain. Understanding it is no longer optional for serious investors, it's essential.